Well, good morning. Today is Monday, September 22nd, 2025, and I am Kenny Polcari, your host of the party, and here are the things that you need to know to get your day started. Well, AI and tech, they just continue to send the markets higher. Although the S&P and the equal at S&P, well, they're continuing to diverge a little bit. Bonds are flat, oil is lower, and gold just won't stop going higher. Nuclear energy is quietly zooming higher. No one's been paying attention. Lots of eco data, housing front and center. And then it's Friday's PCE. And what are you having dinner tonight? We're going to have the chicken piccata. So we'll get to that in a moment. Okay, another week comes and goes and stocks are higher. The Fed made it clear on Wednesday that the next cycle for rates is lower, with two more expected, almost certain actually this year, with a third one likely in January. And investors just can't get enough. Stevie Moran, the new guy on the block, right, the new Fed guy on the block, told CNBC on Friday that he dissented and wanted a bigger move, 50 basis points, which we know, making the case that tariffs have no material impact on inflation, or at least in his mind. So his dot plot, well, he's got 5 cuts penciled in. And not to be outdone, we had Minneapolis Fed President Neil Kashkari, right, who always gets, he's not a voting member, and he's someone who always hates it when the focus is not on him. He came right out and he chimed in saying that he was one of the members that's looking for at least 2 more rate cuts this year. He wants to make sure people know that. Now, later on, the latest wave of tech news and the AI tie-ups, and it's almost a daily thing. Think the Oracle Meta deal, the NVIDIA Intel deal. Think Apple iPhones and that massive tech agreement that Trump and the UK Prime Minister just signed on Tuesday. Then add in the frenzy around quantum tech. Did you see what those names did? INOQ up 65%, D-Wave up 68%, Rigetti up 74%, and that's just in 2 weeks. And then don't discount the old guard names that you probably forgot about because you never hear about them anymore. Seagate Technology, STX, up 165% year to date. Western Digital, WDC, up 137%. Micron Technologies, up 93%. And all this says is the market is hot. The question is, where is it going and when will it end? By the end of the day, stocks put in a mixed result. The Dow gained 172 points. The S&P was up 32. The Nasdaq rose 160. Yet the Russell, along with the transports and the equal-weighted S&P, all lost ground, down 19 points, 31 points, and 15 points respectively. The Mag 7, well, that's tech as well, and that was the clear winner of the day, up 400 points or 1.25%. Now again, look at what happened between the S&P and the equal-weight S&P. One finished higher, the other one was lower. That divergence tells you something. Tech, thanks to its outsized weighting in the market cap weighted index, is pulling the S&P higher, while the broader market in the S&P equal weight is digesting it and apparently backing off. It's just something to watch, right? Recall on Friday we discussed valuations and how they are stretched, and then how the RSIs are suggesting overbought in some sectors as well. On Friday morning, the S&P was only kissing the RSI. By Friday afternoon, it had pierced it. The Nasdaq and Mag 7, which were already in overbought territory, only pushed further into the abyss. And while that alone is not a reason to sell, it is a reason just to proceed with caution. Year to date, the Nasdaq is up 17%, while the Mag 7 is up 20%. Again, not saying they can't go higher, they can. I'm just saying it's a little bit of a warning flag. Now, if you're properly invested, then you're already in. You are participating. There's no reason that you have to have this FOMO moment with your new money. Put new money in other places, maybe that are not so stretched. Now, if you're just starting out, you got to jump in somewhere. At some point, you got to start to do something. So start slowly. No need to go crazy. Remember what I said on Friday. The Dow, the Russell, and the transports are not in overbought territory. And their RSIs are not flashing buyer beware. Of the 11 S&P sectors, only tech and communications are stretched so much on the RSI scale. The XLK is at 72.5 and the XLC is at 78.6. The other 9, they're not even close. This tells you that there's opportunities in other corners of the market. In fact, consumer staples, the XLP, which is the most boring sector of all, they're drifting closer to the oversold line, reminding us that sometimes boring can be beautiful. Now, what isn't boring besides tech? Oh my God, nuclear. Have you been watching it? It has quietly become a hot space. Oklo, the latest name to explode higher, is stealing the headlines. The stock is up 536% year to date. NLR, the VanEck Nuclear Energy ETF, is up 70% year to date. Individual names, right? NuScale is up 160%. LTBR is up 286%. And Genova Genova is up 89%. Now, eco data this week is full of potential surprises. We're going to get both the S&P Manufacturing and Services PMIs, both expected to still be in the expansion zone at 51.9 and 53.9 respectively. Remember, 50 is a dividing line. New home sales expected to be down 0.3. Now, on Friday, Lennar, right, they fell nearly 6%, taking that stock into negative territory year to date, after reporting that their forecast for new homes in the fourth quarter fell short of estimates, citing a tough housing market. Isn't that interesting? And that caused the home builders ETF, the XHB, to fall by 1.4%. Every name in the sector under pressure. Prices are starting to fall in houses, which is not a bad thing because they too have been stretched. We've been talking about this. We've been talking for months now. But don't forget, home builders can lower prices and sweeten deals by offering all kinds of extras to attract buyers. Existing home sellers, they can really only cut prices to attract buyers. So let's see where this goes. Existing home sales are due out on Wednesday, and they're expected to be down 1.4%. Building permits, retail inventories, and the second quarter final revision of GDP, which is expected to remain at 3.3%, is also due out. Personal income and spending expected to be up 0.3 and up 0.5 respectively. But the biggie is going to be Friday's PCE, the price index, month over month and year over year. And that's expected to be up 0.3 and up 2.7% respectively. Now, should that number come in hotter, then you can expect all kinds of commentary around what's next and what does that mean and what does that change for the dot plot. And then it will be month end and quarter end and the start of the fourth quarter. Now, third quarter earnings season is the next big event, and that begins in earnest on when? October 14th. Now, bonds did nothing and yields were unchanged. The 10 years at 4.12% unchanged, the 30 years at 4.74%. But after last week's rate change, for instance, my Fidelity Government Money Market Fund, where I just keep some money, has now slipped below 4% and is currently paying a 7-day yield of 3.96%. As rates go lower, this too is going to go lower, and that's going to cause money that's been sitting in these funds, getting paid 4.25%, to start to look for another home. Gavish. Oil down 14 cents at 62.50 and is now below trendline support at 63.06. This now once again puts 61.50 in the bullseye. That's the August low. Gold continues to bounce around. It was up $41 on Friday. It's up another $40 this morning at 37.25. Analysts are saying that there's still room for gold bugs to run, right? But they're waiting for this week's PCE report and what that might reveal about the future path of rates, which we already know is lower. In addition, you have this massive global central bank buying as well as concerns over the dollar as the reserve currency. And while all that's true, it still feels toppy to me. I don't know about you, but it feels toppy to me. U.S. futures this morning are taking a break. Dow futures down 124, S&P is down 16, the Nasdaq is down 65, and the Russell's down 2. European markets are also lower. Spain down 1%, while France only down 0.3. On Friday, Trump signed an executive order to raise the H-1B visa application fee to $100,000. That's up from what used to be about $2,000. This visa allows employees to temporarily hire foreign workers in specialty occupations where they can't seem to find any Americans, jobs that typically require a bachelor's degree or higher in a specific field to fill roles where highly skilled workers are needed. Common fields include technology, engineering, finance, medicine, and academia. That's causing a bit of angst today, but I think tomorrow it's going to just become old news. S&P closed at 66.64, up 32 points, but it did test 6666, once again making a new high. TikTok is apparently now in American control. Think Oracle, Silver Lake, and Andreessen Horowitz own most of it. 7 seats on the board, 6 will be Americans, and 1 will be ByteDance, right? China representation. The algo, which will still be licensed by China, is supposedly going to be controlled by us. It will be retrained under U.S. supervision. Okay, Time just to move on now, right? Remember, investing is exciting and frustrating at the same time. It's about having a plan. Make sure you have one. It's about timing the market, not timing the market. It's about discipline and risk management. Let's review your plan. Call me for a complimentary, no obligation portfolio analysis. 561-931-0190. Okay, what do we have for dinner today? Well, we're having the chicken piccata. It is delicious. Now, for this, you need thin sliced chicken cutlets, right? You can pound them. You need capers. You want to rinse them. You need 1 large lemon cut in half because you want the juice. You need fresh parsley chopped. You need 4 cloves of garlic sliced. You need 2 shallots diced. You need a half a yellow onion diced. You need a cup of flour, chicken stock, a 1/4 cup of dry white wine, butter, olive oil, and of course, salt and pepper. You want to mix the flour with the salt and pepper in like an aluminum dish. Dredge the chicken cutlets in the flour and then set them aside on wax paper. Now, in a large saute pan, heat it up to medium heat for 2 or 3 minutes. Add the olive oil and a 1/4 stick of butter. When it's nice and hot, sear the cutlets in the pan until they're done. 2 to 3 minutes per side because they'll be thin, right? Then just set them aside on a plate. Now repeat that until you've cooked all the chicken, using more olive oil and butter if you need it, right? Now, after all the chicken pieces are cooked, you're going to turn the heat down to low. You're going to add in the garlic and shallots into the pan. You're going to saute those for a couple of minutes. You're going to add in the capers, cook that now for a minute more. Just let it all kind of come together. Now you're going to add the wine. You're going to allow it to steam off the alcohol. Then you're going to add in the chicken stock and the fresh lemon juice to the pan. Turn the heat to high. With a wooden spoon, scrape the bottom of the pan, bring it to a boil, and then turn the heat down again to medium. You're going to add a half a stick of butter. You're going to let it melt. Now you're going to add a teaspoon of flour to the sauce. Using a whisk, you want to stir the sauce so it begins to kind of emulsify and thickens up a little bit. Taste test it. Adjust the salt and pepper if you need to. Add more lemon juice if you need to, right? But don't do too much because you don't want to overpower it. When you're satisfied with the taste of the sauce, put the chicken back in the pan and gently coat all the pieces. Let it cook for another 2 to 3 minutes so that it all gets warmed through again. Turn off the heat, add the fresh parsley, serve it immediately on warm dishes with, maybe roasted potatoes and a large mixed salad. Make it easy. It sounds complicated. It's really not. It's a great meal, certainly a great meal to make during the week, or it's a great meal even if you're having people over as guests for a Saturday night dinner. In any event, it's Monday morning. It's a little bit kind of steamy out. We'll see how the day progresses. Until tomorrow, take good care.